Think crypto charts are confusing? Watch this first. Most people think reading crypto charts is only for pros, but here's the truth. If you can read a map, you can read a chart, and potentially avoid huge losses while spotting smarter entries. Imagine buying Bitcoin right before a big pump. Not because you got lucky, but because you understood one simple chart signal anyone can learn. In this video, I'm going to show you exactly how to read crypto charts step by step, using visuals, plain English, and no confusing jargon, even if you've never opened a chart in your life. Because if you're investing without reading charts, you're basically blindfolded in a lightning storm. And that's not where smart investors stay for long. Whether you're investing $50 or $5,000, knowing how to read crypto charts helps you stop guessing and start making informed moves. This isn't about day trading or trying to time the top and bottom like a Wall Street pro. It's about protecting your money, avoiding emotional decisions, and spotting patterns that repeat over and over again. Even learning just one or two chart patterns can help you feel more confident before you buy or sell, especially in volatile markets like crypto. By the end of this video, you'll look at charts the way pilots look at dashboards. Not scary, but essential to navigating safely. Here's what we'll cover together in this complete visual guide. First, you'll learn what crypto charts actually show, and why they matter far more than social media hype. Next, I'll break down the 3 most common chart types you'll see, and show you which one beginners should start with. Then we'll dive into key indicators like moving averages, RSI, and MACD, without the tech overload. And finally, I'll walk you through a real chart so you can spot trends, read signals, and avoid rookie mistakes that cost beginners money. By the end, you'll have the confidence to look at any crypto chart and know exactly what you're seeing, even if you're starting from zero today. A crypto chart is a visual timeline of a coin's price movement, showing you where the price has been, where it might be going, and how people are reacting along the way. Instead of staring at numbers or guessing based on headlines, a chart gives you a map of market behavior. Like watching the emotional heartbeat of investors. Every point on the chart tells a story, a surge of buyers, a wave of fear, or a calm pause before the next big move. Once you understand how to read these signals, you'll realize the chart isn't noise. It's a powerful tool that gives you an edge most beginners ignore. There are 3 main types of crypto charts you'll come across, and each shows price data a little differently. First, the line chart is the simplest. It connects the closing prices over time, forming a smooth curve. It's clean and beginner-friendly, but it hides key information like price volatility. Second, the bar chart shows the opening, high, low, and closing prices for each time period. It's more detailed, but not very beginner-friendly and harder to read visually. Third, and most popular, is the candlestick chart. It's the go-to for most traders because it shows everything, where the price opened, how high or low it went, and where it closed, all color-coded to show gains or losses. If you're new, candlestick charts may look complex at first, but once you understand them, they become your best friend for spotting trends and timing smarter buys. How to read charts at different speeds. Every crypto chart lets you choose a time frame, which simply means how much price data you want to see at once. A 1-hour chart shows price movements every hour, perfect for spotting short-term action. A daily chart gives a broader picture showing how price moves each day, and the weekly chart helps you zoom way out to see the bigger trend. Think of it like checking the weather. The hourly forecast helps you decide if you need an umbrella now, but the weekly view tells you if a storm is coming. Smart investors switch between time frames to get context, spotting short-term moves inside longer-term trends. It's like using both a microscope and a telescope before making a move. Understanding candlesticks. Candlesticks may look complex, but they're incredibly simple once you know what each part means, and they reveal powerful signals at a glance. Each candle represents a single time period, like 1 hour or 1 day, and it tells you 4 things: where the price opened, the high, the low, and where it closed. If the candle is green, the price went up. It closed higher than it opened. If it's red, the price dropped. It closed lower than it opened. The body shows the range between open and close, while the wicks, or shadows, show the highs and lows for that period. Some candlestick patterns, like a doji, which shows indecision, or an engulfing candle, which signals a reversal, can tell you when a trend might be about to change. Once you know what to look for, these candles start revealing patterns you'd never notice just looking at numbers. Key indicators for beginners. Indicators are tools that sit on top of your chart and help you understand momentum, trends, and potential turning points, like reading signs on a busy road. Moving averages are the first ones to learn. They smooth out price action over time, helping you see if a coin is trending up or down. The 50-day and 200-day moving averages are the most common. Next is RSI, or Relative Strength Index. It tells you if a coin is overbought, too many buyers, or oversold, too many sellers. RSI values above 70 suggest a pullback is coming, below 30 hints at a possible bounce. Then we have MACD, Moving Average Convergence Divergence. It's a momentum indicator that shows when trends are gaining or losing steam, especially helpful for spotting early trend shifts. Finally, volume shows how many people are trading. High volume during a price move means it's strong and likely to last. Low volume could mean a fake-out. Using even one or two of these indicators can give you a massive edge over guessing or following hype. Spotting a trend is one of the most important skills in crypto. It tells you if you're swimming with the current or against it. An uptrend is when the price makes higher highs and higher lows, like a staircase going up. This is when buyers are in control and confidence is growing. A downtrend is the opposite, lower highs and lower lows. It signals fear, selling pressure, or a lack of interest. A sideways trend, also called consolidation, means the price is stuck in a range, neither rising nor falling much. This often happens before a big move in either direction. To make this clearer, you can draw support and resistance lines. Support is where the price tends to bounce up, and resistance is where it often gets rejected. The more times price touches these zones without breaking through, the more powerful they become. And learning to spot them helps you avoid buying at the top or selling too early. Once you understand trends, the next step is recognizing chart patterns, visual clues that hint at what might happen next. One powerful pattern is the double top. It looks like an M and often signals a reversal from uptrend to downtrend. The opposite, the double bottom, looks like a W and can signal a bounce upward. Then there's the head and shoulders pattern. A peak, the head, between two smaller peaks, the shoulders. It often shows up before a big drop, especially after a strong uptrend. Another key pattern is the triangle, when price moves into a tighter range between support and resistance. A descending triangle can mean a drop is coming, while an ascending triangle might signal a breakout. These patterns don't guarantee results, but they help you anticipate what the market might do, and that means fewer surprises and smarter moves. Let's walk through a real chart together, step by step, so you can see how everything connects in one powerful system. We'll use a candlestick chart of Bitcoin. First, we check the time frame. Let's start with the daily view to see the big picture. Now look at the trend. Are we seeing higher highs and higher lows? That means it's an uptrend. If it's lower highs and lower lows, it's a downtrend. Next, turn on the moving averages. If the price is above the 50-day average and the line is curving upward, that supports a bullish trend. Check the RSI. Is it above 70? That could mean the price is overheated. Below 30? It may be undervalued. Now add MACD and volume. Are they confirming the trend or are they signaling a shift in momentum? Finally, draw support and resistance zones based on past peaks and dips. These levels help you avoid buying at resistance or panic selling near support. With just these tools, you've now got the framework to read any crypto chart and start making better decisions with every trade. Now you've seen how to read crypto charts like a pro, even if you're just getting started. You've learned about chart types, key indicators, trend analysis, and how to spot patterns that most beginners completely miss. That's a skill set that can protect your money and multiply your wins. But if you want help building a beginner-friendly crypto portfolio, one that doesn't rely on trading or technical analysis, then there's a free training linked in the description waiting for you. It's a step-by-step walkthrough designed to help you invest smarter, avoid hype, and build long-term wealth with crypto. No stress, no guesswork. So if you found this video valuable, make sure to like, subscribe, and check out that free training to take the next step in your crypto journey.